Friends, let us start with the more sacred act. It is termed as sacred act because many a times as a teacher I observed the students going to the exam without looking at how the questions are going to be tested in the exam. It's not that they are not preparing, but their preparation, they are not trying to lock it by understanding what is the examiner's and valuer's requirement. Unless we know how the questioning happens in the exam before we get into the exam hall, we will not be able to confidently handle with the subject in the exam. That is why this particular act is a sacred act. Of course, I am doing it for direct and indirect taxes, but for remaining subjects also, if you are aiming to pass, if not in the first attempt, at least in the second attempt, those who are average students and above average students, necessarily they have to go through this particular exercise of going through the 20 suggested answers. I am not saying that forget about the subject and only take 20 suggested answers and you will pass. That's not the point. But for you to score good marks, necessarily you have to go through the previous suggested answers. With this, let me start this particular session on suggested answers, where I am dividing this session into two parts. One is theory questions, another is a practical questions. First we will try to exhaust of all the theory aspects which are tested in the previous exam. Of course, there is no need for you to write anything here because all these questions and the answers are available in any textbook which is written by good authors like Manoharan, Singhania, Ahuja and Vinod Gupta. In all their books you will find these questions and answers, so there is no need for you to copy down the answers or questions, but carefully listen. First, May 2011 question I am looking at. How shall be the assets retained pursuant to an order passed under section 37A5 of the Wealth Tax Act 1957 be dealt with? This question deals with procedural aspect of the wealth tax. See, some search is taking place and seizure of the assets happened because somebody is having undisclosed income. You are seizing that particular assets, or somebody failed to make the payment of the tax, then you will seize the assets. When you seize the assets, you have got two things. One is money seized and another is the assets seized. First, you should understand that to the extent the money is available, first you have to pay off what? Income tax liability, wealth tax liabilities. If that money is not sufficient, then you make auction of the assets and then make sale of it and adjust the proceeds against the amounts due, and balance you need to refund to the whom the assessee. Within how many days that has to happen? Within how many days that has to happen? Within that 120 days and all. And of course, friends, if there is a delay in making the payment or giving the balance back, naturally you have got interest, that is department need to pay the interest. So these are the things which are being specified under section 37A5A. So since this is the area which you have not written in your main discussion part, I expect the students to write down. Section 37A5A. Section 37A5A that is point number 1. The assets seized in the search, the assets seized in the search may be dealt in the following manner, may be dealt in the following manner. A, adjust towards existing liability under Income Tax Act, comma, Wealth Tax Act, then next adjust the amount towards the liability determined on completion of different assessment procedures, Finally, the amount is adjusted towards any liability which the person is in default or deemed default and you should understand the point that to the extent money is available, first use the money. When money is not sufficient, then the assets making a sale and adjusting do arise. So write down, friends, in respect of liability remaining unadjusted, liability remaining undischarged, by using the money, then the assessing officer may recover the amount, by sale of assets. So that means what you have to remember is, when money is there, the assessing officer should not say, no, I want to make sale of this particular asset. Like that he should not say. After complete money is exhausted, then he has to make sale of the assets and adjust the liabilities. And write down, friends, one more issue, that is the balance available after adjustment of the liability, after adjustment of liabilities should be refunded to the assessee within 120 days from the date of completion of search oblique completion of assessment. Failing of which government need to pay the interest, pay the simple interest at the rate of 0.5% per month, at the rate of 0.5% per month are part of the month, are a part of the month. So for the refund, interest on refund is only at 0.5% per month, means per annum it is 6%. That is your first part of this particular question. The second part of this question is, can summons enforcing the attendance and take evidence on both be issued by the valuation officer to the seller of the building for which the reference under section 16A has been made by the wealth tax officer? See friends, here the point is, can summons be issued? See, wealth tax, one person sold one particular property, another person purchased that particular property. Now that particular person who purchased the property said this is the value. Now the wealth tax officer is not satisfied with that particular value and referred the matter to the valuation officer. Can the valuation officer can summon that particular person who sold that particular property and can ask him to take oath and tell what is the truth? Friends, try to understand the powers which are given to the income tax authorities are really great powers. There is nothing that prevents them from doing such exercise, but you should deal with the subject not by general saying. You have to go by the section 16A of the Wealth Tax Act, which deals with the valuation, reference to the valuation officer, which reads as what? For the purpose of making the assessment under the Wealth Tax Act, where the rules of schedule 3 and the market value of the asset is to be taken into account in such assessment, the assessing officer may refer the matter to the valuation officer. When the valuation officer will refer the matter to the, that is when the wealth tax officer will refer the matter to the valuation officer, where the valuation rule says that you have to consider the market value, and if he is not satisfied with the market value stated by the, what is it, the SSC, then the valuation officer may serve on the SSC a notice requiring him to produce on a particular specific date the accounts, documents and records. And where the valuation officer is of the opinion that the value of the asset has been correctly declared, then he should pass such an order, and where he feels that he is of the opinion that asset is having a higher value than the value that is declared disclosed, then the valuation officer may serve the notice on the SC intimating that the value which he proposes to estimate. So in that situation he shall give an opportunity to the SSC to tell his objections before the valuation officer. What are his objections? So in that context, the point which we would like to tell here is that what is the prescription provided in 16A only need to be carried out. So asking the seller to come and take the oath and tell the disclosure is not prescribed. Here is the point. See, we have done with section 16A and understood what is section 16A, but if you much more keenly observes section 16A, it says valuation officer can do all the things which he feels necessary to ascertain the true value. In that situation, under the income tax law or under the wealth tax law, there is a power not only to summon the SSE, but also the person who is having a dealing with that particular SC also can be summoned and can be questioned and can be insisted to take the oath and give the information. Plain reading of section 16A only puts before us that valuation officer shall serve a notice on the SSE asking him to come and produce the books of accounts and do the things. But if you look at the powers of the authorities who are carrying out this particular assessment procedures, they have got power to call any person and examine him on the oath. So write down one small point, that is, as per section 16A of the Wealth Tax Act, when reference is made to the valuation officer, he can serve notice to the SSE, asking him to produce accounts, documents or records. And wherever valuation officer puts a higher value, than the disclosed value, an opportunity of being heard should be given to the SSE. Now you write, either under the income tax law or under the wealth tax law, authorities carrying the assessment procedure is having a right to summon any person and examine them on oath to complete that assessment procedure. There is another bit in the May 2011, friends. Mr. W gifted a gold chain worth of 1 lakh to the adopted minor child of his son. On 31st March 2012, the net wealth of Mr. W is worth of 50 lakhs, whereas the net worth of the W's wife is 60 lakhs. Besides, the net wealth of W's son is worth of 30 lakhs, while the net worth of his daughter in law is worth of 40 lakhs. Males in this particular family is having a lesser wealth than the females. Mr. W's wealth is 50 lakhs, his wife's wealth is 60 lakhs, son's wealth is 30 lakhs, daughter-in-law's wealth is 40 lakhs. क्या हो रहा है यहाँ पे? Will it make any change in your answer if the marriage of the parents of the adopted minor son does not subsist and the child is maintained by his father? First and foremost important thing is, in whose hands it is going to be clubbed is the point. First for a minor child, his income will be clubbed in the hands of the parents whose total income is more. Similarly, his wealth is going to be clubbed in that parent's hands whose wealth is more before this particular clubbing. If the marriage does not subsist, then it will be clubbed in the hands of the parent who maintains that particular child is a point to be well written. Got the point? Because will it be included in the hands of Mr. W, who gifted the gold chain of 1 lakh to the adopted minor child of his son? Point here is there what we are seeing, transferring the assets to the spouse or the minor child, not minor grandchild, for inadequate consideration. So in these lines you have to develop the answer. But deemed asset, section 4, all that reference if you don't give, you don't get the marks. Now I move to the next question, which was tested in the May 2010 new syllabus. Friends, I am not doing the problem section, I am only completing the theory portion of it. H filed his return of net wealth for the assessment year 2006 and 7. Penalty proceedings under section 18 for concealing the particulars of the net wealth was initiated by the assessing officer in 2008. H died on January 2011. The estate of H is devolved on his wife W, who also died in October 2011. Therefore, the estate devolved on their daughter D. Now, the assessing officer passed the penalty order on 8th February 2012 and served a notice of demand of penalty on D. Is the action of the assessing officer is valid in law? See, as we proceed in reading the suggested questions, previous examination questions, probably you will be understanding many times these areas are being questioned. Probably this listening will help you when you are writing in the exam. Definitely you will remember me. Sir discussed all these points. So friends, here the point is very simple. That is, under the income tax law, penalty proceedings, penalties of the deceased can be passed on to the the legal heirs, but not under the wealth tax law. Only this point you please write down. That is, under Wealth Tax Act, penalty cannot be levied on the legal heir of deceased, However, all other assessment proceedings under section 14, 15 shall apply to the legal heir. As they apply to the deceased. Then friends, after May 2010 theory question, we move to the May 2010 old syllabus. Yes, here there are 3 bits. All the 3 deals with the theory aspect only. So let me read one after the other and we will discuss. Examine the correctness of the following statement as per the provisions contained in the Wealth Tax Act. The building and land appurtenant thereto held on valuation date always do not form the part of the net wealth. You are using the word always do not form the part of the net wealth. No. There are 4 circumstances when building and land appurtenant thereto shall not be forming the part of the net wealth. What are those 4 situations? That is, first situation, if it is a house exclusively used for the residential purpose and is allotted by a company to an employee whose gross salary is less than 5 lakhs, then such house is not to be included in the net wealth. Similarly, whether it is a residential house or commercial house, if it is held as a stock in trade, then it is not to be included. Similarly, in case if the house is occupied by the SC for his business or profession purpose, it will not be included. Similarly, if a property is let out for residential purpose 300 days or more than 300 days, then also it will not be included. Similarly, if the property is in the nature of commercial complex, then also it shall not be included in the net wealth. But for these 5 situations, in all other situations, building and land appurtenant thereto will be included in the net wealth. I think students will write this, write down. Not required. Okay. You will remember confidently. Okay. Then I will move to the next question, friends. Every officer of the company shall be treated as a principal officer in respect of the proceedings under the Wealth Tax Act. It is not the case. When we say principal officer, means what? Secretary, manager, managing agent, managing director of the company. Or in the absence of these people, on whom the assessing officer serves the notice by treating him as a principal officer, only shall be treated as a principal officer. Not that every person in the company can be treated as a, what is it, principal officer is not a correct statement. Hope you will remember. Then friends, I will go to the next bit in this. That is D, a private limited has a farmhouse situated at 30 kilometers from the local limits of the Jaipur Municipal Corporation, and it is also having a guest house at a distance of 40 kilometers from the local limits of the Bangalore Municipal Corporation. Decide whether the farmhouse and the guest house are chargeable to the wealth tax. As all you know, guest house, wherever it is located, it will be treated as an asset, whereas farmhouse located above 25 kilometers from the local limits of the municipality shall not be regarded as an asset. If it is within 25 kilometers, it shall be regarded as an asset. There the valuer is expecting you to write that asset as per section 2EA. Right? Other way around, like this questions, only 50% marks will be of the allotted marks will be given to you unless you write this 2EA section, asset definition. Now I move to the third bit in this, friends. Parikh pledged his jewellery with a financier and borrowed some 50 lakhs. He acquired shares of a limited company out of the borrowed money. Now the value of the assets is, market value of the jewellery pledged with the financier is 80 lakhs and market value of the shares as on the valuation date is 28 lakhs. Now the loan outstanding on the valuation date is 48 lakhs. Compute the net wealth of Mr. Parikh as on 31/3/2012. I am bringing it to the theory because there is no much of problem that you have to solve. The only thing that we are expecting you to present there is your understanding of the point. First is, shares are not assets, and if you borrow the money to invest in the shares, then such debt will not be allowed to be reduced. Moreover, this debt is not taken to purchase the jewellery, so against the jewellery also that debt is not allowed. So only thing is, he has got a jewellery 80 lakhs, it is only being pledged, so ownership still continues with the SSC. So 80 lakhs is the wealth, up to 30 lakhs no wealth tax, the remaining 50 lakhs at 1%, that works out to be 50,000. No surcharge and educational cess. I think all of you got the point. Is there anything to write? Very good. Then if the students are cooperating like this, probably we will be able to finish off very fast. Now I move to November 2009 new syllabus. A question. Under what circumstances a assessing officer can make a reference to the evaluation officer for the purpose of making the assessment? This is the second time we are coming with the reference to the evaluation officer. Friends, try to understand where the assessing officer feels that the value disclosed by the SSE is not representing the fair market value, then he can make a reference. In other circumstances, what is stated, the fair market value of the asset, what assessing officer feels is exceeding what the value that they have disclosed by 33.33%, or the difference between what assessing officer feels and what the SC disclosed, the difference between these two values is more than 50,000 rupees, then reference can be made to the valuation officer. Or if the assessing officer feels that such a asset is keeping the nature of that asset into consideration, if he feels necessary to do so, he can make a reference to the valuation officer. Is a point. Noteworthy point is, such a references to the valuation officer can be made only when the assessment procedures are pending. Not that just like that the assessing officer while going on the road, he saw one building of one particular big man in this town, immediately he cannot refer the matter to the valuation officer, go and evaluate. Only when the assessment proceedings are pending or reassessment proceedings are pending, then only the reference can be made to the valuation officer, is a noteworthy point which you have to remember. But since the students are in the mood of listening and not writing, I am leaving it, but other way around, all these noteworthy points should come in the refer before exam notes. Then friends, I move to the next question, that is we have theory question in what is it, this one exam. Wealth tax officer issued a notice to a cooperative society to file the wealth tax returns. Can he do so? Cooperative society is not an SSE. So, to a person who is not an SSE, he can't issue a, what is it, notice. Who said so? Cooperative society is not an SSE, section 45 says. So, as a valuer, I am expecting whether the student give reference to the section 45, which will tell who are not the SSEs. Then friends, one question here is, in whose hands the assets and the debts located outside India be excluded from the assessment? See, assets which are located outside India and debts incurred to acquire those assets, for in whose hands it is not taxable. For a resident and ordinary resident, global wealth becomes taxable. But for, let us suppose he is an individual who is not a citizen of India, or if he is an individual who is non-resident or a resident but not ordinarily resident, in respect of the assets which are located outside India, they will not be included in the net wealth. If you are an HUF and that HUF is a not a non-resident or resident but not ordinarily resident. If you are a company who is not a resident, means non-resident companies, for them assets located outside India and debts incurred to acquire those assets will not be included in the net wealth, is a point to be well remembered. Then friends, I move to the next question which was given in May 2009 new syllabus. Here also let me do with the theory questions. There is one SSE who is not satisfied, aggrieved with the wealth tax officer's order, filed an appeal by taking for the first time the ground that notice to complete the assessment was not served upon, but he had cooperated for the completion of the proceedings. Are you in agreement with the view of the SSC? First try to understand the question. क्या हो रहा? एक SSC के ऊपर कुछ assessment procedures are pending. This SSC is regularly going to the office and cooperating with that particular officer. Finally, wealth tax officer passed an assessment order. Now the SSC claims that I am not being served with the notice, so I am not going to accept this particular assessment order. See friends, many a times this happens to many of us. Every human being takes a birth and comes to this particular world with certain rights. Of course, certainly duties. But you should know when to ask for that particular right. When to ask for that particular right. See, I am the principal and Krishna Reddy is the article. Right? As long as everything is moving well, Krishna Reddy is very happy with me, enjoyed with me. Suddenly on one day, I scolded him because he did a small mistake. Now Krishna Reddy at this moment says, principles of natural justice should be there. You are not treating me like an article assistant. And he is now saying all the principles. At the end, 3 years of articles, just 4 or 5 months before, he says, what do you think of Mr. Chakravarti? You have made me to go to Adilabad and sleep on the floor. You have made me to do the Indira Kranti Padakam audits and expect me to sleep on the floor. I am going to complain to the institute that you are not treating me not even as an article clerk, not even as a human being. I am going to file a case against you. Now even the institute will say what? Mr. Krishna Reddy, for how many years you are doing this particular audits? 3 years, sir. तो अब क्या हो रहा तुमको? In case if you are expecting that, you should be treated like an article, you should be given all the things which normally any principal will give to any student. You should have claimed all these things in the first year. First year you kept quiet, second year you kept quiet, third year only you got the problem. No. Many times on political leaders also cases will be filed after 13 years, 14 years. Then first question which the lawyer or the judge will ask the other person who filed the case is, when you know all these things, at that time why you closed your mouth, now why you are opening your mouth? Right? So what the point we are trying to drive is, without his giving a notice, you have gone to his office and cooperated in expectation that he will give you a soft order. Once the assessment order comes to hard, you are going on a technical ground saying that notice is not being issued. How can the assessment order can be passed? Like such can you ask? The answer is no. So who said so? All this. 292 BB of the Income Tax Act says what? Where the SC has appeared in any proceedings or cooperated in any inquiry relating to the assessment or reassessment, it shall be deemed that any notice under the provisions under the Act which is required to be served upon him has been duly served upon him in time in accordance with the provisions of this Act, and such SSC shall be precluded from taking the objection in any proceedings or inquiry under the Act that notice was not given. So that means in the example which I gave, it is deemed that I have given AC room to Mr. Krishna Reddy, star hotel. For all of you probably you might have seen only 7-star hotels maximum, but I have given opportunity to Mr. Krishna Reddy to see the 1,000 stars. Because the places where he visited to do the audit, he slept in the open air. So how many stars you might have seen? So today you can't say that I am not being put into the 7-star hotel. Okay, so the point that we want to drive is, once you are cooperating, at a later date you can't go by saying that I am not being served with the notice shall be deemed to have been served is a point to be well remembered. Then Ram gifted one house property value 100 lakhs to his wife on 1/4/2011 in an agreement to live apart, in whose hand the said property will be assessed to the wealth tax. Once they take a divorce in an agreement to live apart, if property is transferred by husband to the wife, it will not be clubbed into the wealth of the husband who transferred the property to the wife for inadequate consideration. It will be taxed only in the hands of the transferee, that is the wife. But all this you have to write by giving a due reference to section 4 deemed asset concept. Then friends, I move to the next question. The next question we have, of course, November 2008 new syllabus. That is, what is the meaning assigned to the net wealth under the Wealth Tax Act? Already we have studied what is the meaning of the net wealth. That is aggregate value of all the assets, add deemed assets, less exempted assets, less debts owed in respect of the assets which are included therein. So not that all questions are difficult. Some questions are most repeatedly tested questions. Similarly, for a ruler, heirloom jewelry granted to a former ruler by the central government, there is an exemption. So you have to write 5 clause for jewelry in the possession of any ruler not being his personal property which has been recognized as a heirloom by the central government is exempted, subjected to the satisfaction of some conditions. What are those conditions? First one is that he should not take away that jewelry and go to London and settle, and he should take all reasonable steps to see that the jewelry is in its original shape only, and whenever income tax people want to come and inspect, he should make all facilities to see that the inspection gets carried out. Subjected to these 3 conditions being met with, that the jewelry, heirloom jewelry will be allowed to be get exempted. Then friends, I move to the next November 2008. Mr. X, a member of cooperative society, was allotted a plot, and the plot is not being registered in the name of this particular member. Ownership continues to be there with the society only. But still your deeming section says what? In such situation, the allottee shall be deemed to be the owner of that particular property, and in his net wealth it is to be included. So deemed assets is also most repeatedly tested area. Then friends, I move to the November 2007, and in this the theory part of it is, one question is there: examine the correctness of the statement that all types of the land held by the SSE on the valuation date are treated as urban lands under the Wealth Tax Act. No. In which circumstances urban land is exempted or not treated as an asset? Friends, try to understand. First thing is, if there is an urban land on which permission is not granted to construct the house, that shall not be included. Similarly, if there is a building, land being occupied by that particular building, that land also will not be separately valued and put under the net wealth. Similarly, if there is a land which you acquired for the purpose of using the same for the industrial purpose, for 2 years it is not to be treated as an asset. Similarly, if there is a land which you are holding it as a stock in trade, for 10 years you can hold it as a stock in trade and it will not be included in the net wealth, and after 10 years it will be included. So these are the 4 points which you have to. Earlier with respect to the house property you did with one question, now with the land you are doing the another question. So these are the things most repeatedly tested. So I expect the students to be careful, because all the questions in the CA final exam also cannot be expected to come with surprises. There are certain questions which are most repeatedly tested. So under what circumstances urban lands are being exempted from being included in the net wealth? Under what circumstances building and land appertaining thereto is being exempted from being treated as a net wealth is very, very important from the examination point of view. Then friends, I move to the May 2007 where 2 theory questions are there. Yes gifted 2 lakhs to his wife on 10/4/2009. His wife brought gold jewellery on 31/1/2011 out of the said sum of 2 lakhs. The fair market value of the gold jewellery on 31/3/2011 was 2,50,000. S claims that since his wife has not held 31/3/2011 the sum of 2 lakhs which he gifted to her, no amount is includable in his net wealth for the assessment year 2012 and 13. Is his claim is correct? No. Even if the gifted assets are converted into another assets, even those converted assets also are to be included in the hands of the person who transferred the assets to the spouse for inadequate consideration, is what many number of times you have studied. Only thing is you should quote that particular section 4 at least, if not subsections. Then another question, wealth tax is not payable by the SSE in respect of any property held under the trust or other legal obligation for any charitable purpose or religious purpose in India. Do you agree? See, if a particular person is creating a trust, and that is a property is held by the trust and the trust is engaged in charitable and religious activities in India, it shall not be assessed. But however, if such a charitable or religious trust is applying that particular money or those assets for the immediate or deferred benefit of the author of that particular trust, then those assets will be subjected to the wealth tax. When such a provision gets invoked, this particular trust will be assessed as if it is an individual, is a point. This is also tested twice or thrice.